Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. I hope you guys had a good week trading this week. I am recording this intraday, so this market should be open another 2 hours. As I record this video, market should be open another 2 hours. And the market will be closed on Monday, Memorial holiday. So we got a long 3-day holiday weekend. I am looking forward to it. And so let's continue with our analysis here. Let's start with the Spider, Diamond, Qs, Russell, Semi, and the banks, and call it a day. So let's see how the levels played out here since last week's analysis we did last Friday. We talked about 280 level. And you can see that's kind of, we saw some shenanigans here. We did initially saw a gap up, and then we gap down just a few days ago. So because of that gap up, gap down, this is now, I'm going to turn this into what? A purple line signifying that this is actually a island gap down. So now this small right here, that's becoming island top, right? Because we can see that initially we saw a gap up right there, and now we saw a gap down. So now we're kind of battling between that 280 level, and I think 280 is pretty obvious level, right? That's a very, I have to say, pretty prominent pivotal level, and we can all see that that's a level we've been holding around all throughout November and October and December. And then even here in February and March, and that's the level we initially bounced. I think, market be like, okay, that's too easy. Everybody's maybe buying that dip and needed some little bit more shenanigans. We came back down, a little bit more dip buying occurred, and then we were trading up a little bit. But I think these gaps are going to definitely make things a little hectic, and I'm not gonna be surprised to see this thing coming lower. Just to shake a little bit more people out, and maybe taking some stops, right? If anybody started chasing up here on this move, they'll place their stop just beneath it, right? And the market a lot of times knows and they want to come down, take those stops, maybe flirt with that kind of 100, 200 SMA in that vicinity before going higher. You know what? Let's give these levels. I think these will be pretty good. 280, 277, 275 level 5. Levels gonna be pretty good, at least going into next couple weeks here. So could we bounce from here to 80? Yes, sure. We do have a double bottom that has not been confirmed, but again, this gap down is gonna make things hectic. So two things can happen. Bulls go up here and fill this gap, and the gap gets filled. What does it do? It pulls back. And when it pulls back, because it's going to act as instant resistance, that's the level we have to worry about. Okay, so now it's 280. And then when it does pull back here, what do we have? Series of lower highs, right? Right, look at that. We got the high, lower high. This was a lower high here. And this thing goes up and fill that gap and then pull back. That will be another lower high. And that will be a lot of selling momentum in the shorter term, and that could potentially bring it back down for sure. I think it's going to pull back down to maybe 280 and see how that level plays out. But if we lose that 280 level, probably come down and retest at 277. And if the market really wants to stir some things up, maybe even 275 level. But if market want to see, some more shenanigan here, I've seen it where, market recovers after a correction and then it pulls back, and then market gives you a lot of shenanigans, meaning it goes up, it gaps up, gaps down, gaps back up, gaps down, gaps back up, where there's an island bottom, island top, island bottom, island. I don't know. I don't know where. I swear I don't want to go to it right now because I want to actually keep this video short. But there's also possibility you see something like that where there's island top, island bottom, island top, island bottom. And then usually when you see shenanigans like that within a primary term uptrend, and it is cultivating intermediate term uptrend like we are, right? We saw that 25% run, we're pulling back. And then if this thing goes up and down like this, right? Oh, gap up, gap down, gap up, gap down. In that process, we're making like, island top, island, island top, island bottom, island top. Usually it resolved to the upside from my experience. So if we start to see up and downs, I think it's going to resolve back upside and then fill these gaps right here. And then once that gap gets filled, probably pull back again. So again, we're going to stay here for a little bit. Probably all throughout, for sure for May, and then throughout June. We're going to stay here a little bit. We've made 25% run here. And that's a majority of move. S&P usually in a good year makes about 25% run, and we made 25% run, in a quarter. And so there's gonna be some digestion happening. There's gonna be some sideways happening here. And again, these gaps are not going to make things easy. It's gonna make things a little bit hectic. So I gave you some of these levels here: 280, 277, maybe 275, but 280 and 277 likely become a pretty strong support, I think, at least going into next couple of weeks here. Let's go to diamond. So diamond, I haven't changed anything since last week. 250 to 250. It's been the level that we've been looking at. Again, diamond is kind of same situation there. There's a gap up and there's a gap down happen. So we've got tiny gap, and that tiny gap, let's annotate that purple as well. That tiny gap is kind of an island top, right? We saw a gap up and then we saw a gap down. So you can see that those 2 days right there is an island, right? The microterm. And but the gap level is holding, and that's a good sign. And we got that. And again, unlike spider though, diamond is retesting that 100, 200 SMA already, which is coinciding with the gap area. So 252, 250. What the bulls don't want to see here, if this thing does pull back next week, this thing gapping down, making this entirety an island top. That's definitely going to make things worse. And this thing, if that happens, that's going to definitely go to about 244 and fill that gap, right? And it's going to about 245 on the Dow. But that's, that is tough to say if it's going to happen or not. Again, we got this gap here. I'm kind of thinking we may see some gap ups and gap down shenanigan here. Potentially sideways move before going back up and then fill that gap. But again, there's that gap. If that gap gets filled, it would be better if the bulls gap it up, right? Up and then a run and then fill that gap. But sometimes it can gap it up, stay here a little bit, gap right back down, stay a little bit, gap right back up. Because it reminds me of what happened. I don't know, it was a couple years ago or something like that. And I was trading it, and that happened, and sooner or later, like it did up and down shenanigan, and then like sooner or later it resolved to the upside. Kind of reminds me what's happened here recently. Let's go to Qs. So yeah, we annotated last week 177, 175 is the level, right? So that's that first level of that lower high, and that was an important level. Obviously, that was that first lower high that turned into that minor to intermediate term downtrend, and that's where we found support here. We made another leg higher. We're pulling back here, and it's pretty gappy here. We gap down, and then so we get another gap here. Let's annotate that as well. Got that gap. So we got upside gap here, the 175 area that is coinciding with the 100, 200 SMA, and you got that gap down area. So again, these two gaps are going to make things a little bit hectic here. So we're just kind of hanging around here. And again, I think we're going to stay here for a little bit. If the market, manages to gap back up, maybe gap it up and run, this gap area is also going to make things work, make things hectic. And probably bear is going to start talking about the double top and then possibly pull back. And then we have to probably reassess the situation. If this thing starts pulling back, then maybe fill this gap. Then we're going to retest what? The second lower high here. Again, remember this was the first lower high, and that's where we bounced. That's where we're staying at 177. And we got the second lower high right there. And that's kind of the next pivot, resistance, and support, which that was resistance here, and that's the level coinciding with the gap area and the 100, 200 SMA. Let's go to Russell 2000. Russell 2000, we gap down here. What we can do, did we talk about it last Friday, right? We talked about don't be so precise with this level. This is a reference point. So when you see, you can see that what you can do is you can actually kind of adjust it a little bit. There, you see that it still connects. This is a lot of times when nowadays everybody got charting software, right? I mean, you got these free charting software. If you open up a brokerage account, they'll just give you charting software. So everybody got these. They can all draw trend lines and these pivot levels and stuff like that, and they'll be so fixated on it. And like as soon as they draw a line, right, and then they see this happening, it's like, oh my god, that's bearish. Oh yeah, we're breaking below the trend line, bro. Oh my god, yeah, I'm gonna get stopped out, man. Oh yeah, I'm gonna short this, bro. Yeah, and then like what happens is they go long, place their stop just beneath it. Market comes, take out their stop, they take a loss, and then they short, and then place their cover stop right there, and market goes right back up and take your stops on both direction. And then you're like, oh my god, I hate trading Russell 2000, I don't want to trade it, right? And that thing finally goes. And then you come back, you look at it, you just missed out the entire move because market just did an up and down shenanigan. How many times have you been in that scenario? So that's what I'm saying. Don't be so, if you're drawing these lines, don't be so fixated on them. Don't be so precise with it. Adjust it a little bit, like that. I just adjusted it. Just here. I mean, now it actually connects better because you got that, you got this, you got this, you got that, you got this, and you got that. It connects a little bit better. But we actually have, go to hourly chart on the Russell. Remove that for a second. We actually got this gap remains open. So we got up gap. We don't have up gap today on the other indices because they were filled pretty quickly. So we got up gap there. It's not bad. Because I mean, gaps could provide, some cushion. So let's do this. This will be the level. 149, 145. Right? 149, 145. Unless we see a gap up. We see this gap up from here to here, they'll make this an island bottom. And obviously opposite true, we gap right back down, then that's going to be another island top and it comes right back down to 146.20. So right now we're at this juncture in the market where it's just going to be 50-50. I don't know what's going to happen on Monday or Tuesday. There's going to be continue to have a shenanigan again. But if you look at things in the overall sense, man, we just made this straight up move. This is a market floating around is a good thing that most short-term traders doesn't understand. A lot of short-term traders, they're just going to get chopped to death here. A lot of times what happens to short-term traders, they miss out this entire move, right? And then this thing pulls back and they start buying it, right? They start adding onto it finally. And then they hoping going to go doom, boom, boom, boom. That doesn't happen, usually comes right back down. And so this is kind of what I'm saying is, you wait for quote unquote better entry or perfect entry, and then market is going to make it difficult for you, because all the move has already been made. And so I'm actually thinking that throughout the summer, at least early part to mid part of the summer, things going to be hectic, People who took risk down here, who bought, they're profiting. If you were waiting around for maybe, again, quote unquote better entry, not doing so well. And a lot of times that's kind of how it plays out in the market. Let's go to semis. So semis, we talked about that level here, that falling pivot. I'm actually not surprised to see this thing coming a little lower again. Market a lot of times what it's like to do. Certain obvious level, it kind of gets below it, kind of throws a lot of people off, and then like, oh yeah, what does this mean? We're below this pivot. Does this mean this thing gonna come right down? You know what I mean? We looked at 105, 101. We actually got much, much below it. So let's actually adjust this. So now, let's do that. Let's look at these two levels. I think those two levels are pretty solid level, obviously, but I think that was a midpoint neckline. That's the 99, and look at all throughout this level, 96. So I'm gonna look at these two levels here. I have to say you know what I'm gonna throw a fib, and this looks like that's gonna be about 50% there. Yeah, pretty It's right around there. So I think this is a pretty good level and pretty strong support here. We may come down a little lower, maybe dance around this area, but I think a semi is getting ready to bounce and go back up. You know, again, we might V-shape or we might do double bottom, you know, like something like this, or we might do invert head and shoulders. I don't know how it's gonna bounce, you know, crap like this. I don't know, but I think this vicinity is a pretty good level that we're gonna find some buyers, and then this thing getting back up here, and fill those gaps. One last one, let you guys go with this XLF. So we looked at several levels or a few levels here last week. And on XLF, we're still holding the neckline. We're holding the neckline. We briefly gotten below it yesterday, and you can see the lower wick, but we got right back up. And that's the level coinciding with what? 50% fib, which we looked at last week. And again, that's the level is retesting that 200 SMA, right? 200 SMA. I just looked at my other screens and I just found that, you know, I gotta look at, not that one, this one. Again, this is 65-minute chart, guys. Lower low, higher low. Again, these short term, these bullish divergences, they're very short term. I mean, you know what I mean? But what could happen is we got that very, very short-term bullish divergence, right? And we got this gap here. You see this gap? If we hang around here a little bit, it could be Tuesday or Wednesday or sometime next week. If we see market gapping up right here and then continue to kind of move higher, that could really jumpstart with the fact that we have this bullish divergence on the short term. So then this short term, you know, obviously that's a micro term for me. That micro term bullish signal could ignite, and if we do see a gap up, could continue higher. But if we don't see a gap up, if this just kind of continues higher and fill that gap, and that's the extent of what that short term bullish divergence is going to do, and then we'll probably fall back because that gap got filled. Again, when the gap gets filled, and if you follow me long enough, you understand when the gap gets filled, it does usually act as short-term or instant resistance. So, well, I wanted to keep this short, and I wanted to have you guys more time. Enjoy your time this weekend with your family and friends, and have a long holiday. And we'll come back next Tuesday, and you can always follow me on Twitter at 2KKim. And if I see some of these, you know, island top, island bottom gaps, if I see it, I'll tweet it out next week, and we'll go from there. Enjoy your long weekend, and I'll talk to you next week, and good luck trading next week.